So passive investing, traditionally, it used to be very much leave these investments alone, just let the market kind of tick along. Within ESG, sustainable investing, how does passive work there?
Yeah, it's a good question. So for us, passive sustainable investing is possible. It is a good way in order to create sustainable outcomes, but also keep costs low. So passive investing is also very desirable by some clients because the charges are very low for these types of investments. So that's a benefit. What does it mean? So passive investment traditionally means you're investing in a market index, which basically means the entirety of the market, and you just see what happens with the market, and you will never outperform, you never underperform. That's kind of the background. Sustainable passive investing might invest in the entirety of the market like an index, but it might apply a couple of further methodologies on top of that to invest or tilt or invest in certain bits of the market to improve the sustainability credentials associated with your investments. So for example, let's say the FTSE 100 is a market index. A traditional investor might invest in all of them, 100 companies, that's it. A sustainable investor might look at how each of these companies are performing on environmental, social, and governance and only invest in the leaders. They might also think about how they, let's say, do they have a climate change strategy and only invest in those that do. And so you're still very diversified across the market, but you're still delivering an enhanced sustainability consideration. So that's the way it usually works. And you can have different ambitions depending on what you want to do.
Okay. Well, how ambitious could it potentially be?
I mean, it's been, I think maybe 3-4 years ago, we didn't think sustainable passive investing could work. And the reason for this is because the products weren't out there, the information wasn't out there. It needs to be, if it needs to be passive, it needs to be rules-based. So there needs to be information that then affects your investment selection. There's no person that sits there and says sustainable, not sustainable. There's data-driven in out or overweight of companies. So that's what we thought, but it's been fantastic to work with asset managers in the space. We launched the EQ Future Leaders portfolios in 2020, actually, when we thought there was enough out there and we could be ambitious with it. And I'll tell you how we are ambitious with it. So the core of the portfolios invests in passive managed funds and ETFs that only select the top 25% of environmental, social, and governance leaders within each sector, after excluding a couple that we don't want to own, for example, oil and gas extraction or gambling, for example.
Yeah.
But so that we're basically only investing in the sustainability leaders within each sector. And we can do that rules-based and low cost. And then on top of that, the ambition doesn't stop there. We also invest in sustainable themes. So for example, we invest in healthcare innovation, we invest in green bonds, which are basically any bonds that you can buy on the market, but where the proceeds of these bonds are directly linked to green projects. So building out new insulation, building out new solar farms, for example, and also things like decarbonization leaders, digital security. All of these are extra things that we add into portfolios to overweight these sustainable themes and improve the sustainability credentials. And we're continuously pushing the bar. We're engaging with our asset managers to try to improve the sustainability credentials as much as possible, as is possible in the passive space. And that's the ambition of the portfolios.
Wow, very ambitious.